Thomas Russo sold 100% of his Alibaba stake. He did an interview with William Green discussing why he sold 100% of Alibaba. We're going to discuss it in this video. Thomas Russo has a 9 billion plus portfolio. He's been investing forever. He's held stocks like Nestle, like Heineken for 30 plus years, and Berkshire. He's a really good value investor and he sticks to those strategies. So in this video, we're going to discuss why he sold 100% of Alibaba stock and is it justified. A lot of Chinese equities right now are running high. They're up like 40-50%. And a lot of people still think this is a fake rally and it's going to go crashing down again. So we're going to discuss what's happening with China and if the Chinese market is still a good market to invest in at this time. So let's get into this video right now. But before we do, like it and subscribe.
We had a position which we started during the turmoil in Alibaba. In Alibaba, the thinking there is they are absolutely positioned in a way that the Chinese consumer cannot do without them in terms of the extensiveness of their command over the e-commerce. And in fact, our Western companies who wish to sell their products to Chinese consumers cannot do without Alibaba.
And that is Alibaba's biggest moat, and that's why you see a lot of value investors rushing in to buy Alibaba, like Charlie Munger, like Guy Spirit, because they understand that in 5 to 10 years, people are not going to switch their buying habits. They're not going to go to somewhere else because Alibaba is just so dominant. They own like 50-60% of that e-commerce market already, and they're still growing, and they still have more growth in the cloud computing sector. So the moat is just enormous, and people can see that. If you can guarantee that this company is going to earn more cash 5 to 10 years from now, you can kind of be satisfied in your investment that you understand this company and you know it's going to generate more money. So you don't have to be gun shy and just kind of rush out of the stock. You can still be secure in these stocks going down when you know these companies are going to be bigger in 5 to 10 years.
Both of them had come down sharply in price. We hadn't owned any of them, as you suggest, up until November of last year when we put a small position in Alibaba. And we said at the time, we understand that the biggest risk here is one of agency costs, and it's a whole nation that serves as your agent in some ways, and their proclivity to pull from you what ought to be yours. It was just vastly more profound than we had feared.
And that's a lot of people's fear right there, is that the agency cost of owning Alibaba is just way too high. The Chinese tech crackdown lasted around 2 to 3 years. That was way longer than many people expected to happen. Plus, you saw what happened with the education sector. They actually killed the whole market in the education sector. So if China is able to do that with the education sector, with gaming, who knows what's going to happen with e-commerce. But with my bet, e-commerce is more safe because it's not a negative to the culture. It doesn't provide any kind of negative sentiment to the culture of China. Not like gaming does or the education sector, because the education sector was having a negative effect on students that actually were enrolling in these programs to kind of make sure they had these crazy grades, and they're kind of like forcing you into that. So you can kind of see why China did that. But still, you can kind of see the reversal of what's happening in China right now. They're being more lenient on all of these tech companies. They're saying that they want economic growth now. They want to get back to 5 to 6%. So I'm wondering if he would reverse his stance since he sees all the positives coming out of China and what the people are saying about China right now.
We marked the position with a sort of be careful stamp because we weren't sure, and that's something that we've learned is even more entrenched in sort of the difficulty of keeping what you create. There's also been, in China particularly, there's been massive distractions as a result of real estate, which was built to bust in some ways. As is so often the way in that case, that means that the people who build it make an awful lot of money, but the banks that fund it end up socially distributing out the costs more broadly. And I think we're about to go through one of those in China, as it may be already going through it.
And with the real estate crisis that he just mentioned, we can see that China is actually supporting the real estate market, actually giving funds for these real estate companies, making sure they don't default. That's another reason why he sold 100% of Alibaba. So we got the agency cost, then we got the real estate market. But you can kind of see in both instances, the Chinese government is actually kind of helping these sectors, actually putting money into the sectors to make sure they do good for the country. Do you believe that the government is actually doing the right thing, or do you believe it's all talk? The government is not going to do that. The government is actually kind of just putting up a facade and saying that they're doing this, but they're not really. It's up to you to make that decision for Alibaba.
Well, it's been from almost the first day. Ant Financial was the catalyst that caused the drop initially that we were able to put a small position on at the same time in Alibaba. That was a fairly substantial reorientation of a financial service venture that Alibaba profited mightily from, and it promised to have far less profits for them ever since really we entered the investment. But it was that direction was suggested, but it wasn't sure, and it's become more clear and sure over the holding period, which is about 1.5 years, I guess, for us. It's quite possible, it's our belief, that the valuation has come down along with the share price. And so, and the certainty with which we believe some of the businesses would grow and contribute has raised. And so, for example, a big example of that is the cloud business and the politicization of the cloud business. I gather from one of my colleagues that the TikTok I think it's the case that they had been a user of their cloud, Alibaba's cloud business, but would not be allowed to going forward for a variety of reasons. And then more recently, the dual listing question, the Hong Kong listing versus the requirement of changed accounting. This is that last one is what gave me the sense of Warren's comment, which is you don't get extra points for degrees of difficulty.
So Thomas Russo took on more complexity than he thought he could handle with Ant Financial going down. He thought it was just a little blip, but it affected the intrinsic value heavily on him. Even though he invested during that time, he didn't think that it was going to affect the intrinsic value as much as he thought. He looked at the cloud business and he was like, damn, it's affecting the cloud business as TikTok left the service. We have the dual listing that he's worried about as well. So with all of these segments getting crushed, and he's worried about what the government's going to do because they've been killing the education sector, a little bit of the gaming sector, financial sectors. The role of the government in China, as you can see, is just making sure that the companies that are actually doing good for the economy continue itself. But with that being said, you can kind of see the Chinese government reverting everything and kind of going back on what it's been doing. You can see the technology companies kind of getting back to where it was, as the government is actually supporting Ant Financial now with an increased credit limit for Ant Financial. That was huge. That can spark a potential IPO in the next year or two. We can also talk about the dual listings and how the government is actually allowing USA to open its books and see everything that's going on with a Chinese company that has never been done in history. The government has stated that it wants China to go back to 5 to 6% growth, and it needs the e-commerce companies, it needs the big tech names to do that, to provide economic growth for the country. So you can see a positive there. I still understand Russo's position on why he cut 100% of his Alibaba position, because there was just too much risk and too much unknowns. But that provides the potential for huge gains, and I can see the government kind of doing the opposite of everything he's been saying. But that's up to you to come to your own conclusion, guys. Like this video and subscribe to my channel, guys. Peace!